Hey guys, it's Will here. Thought I'd do a video on what happened with the markets as of after Friday's crash or drop that we had. I just wanted to show you this video I did last on August 20th, which is about a week ago. Markets pull back at 20-day moving average, 200-day moving average, which is the red line here. So I've been talking about a pullback, and even before that, there's a bigger downtrend. So let's hop over to TC2000. That's what I use for looking at the charts. If you want to get a free trial or $25 off purchase, check out the link below in the description box. And I love this program, and I'll go through some of the stuff that how I use it right now. But this tab is what I've done is I've created various watch lists. So this is a list of a few of the major indices: NASDAQ, IWM, Russell 2000, S&P 500, Dow Jones, the TSX, which is Canada, and then the VIX, which is the volatility index. And that's not a market per se, but it's in relation to what's happening, and I'll show that as well. So as I mentioned, some of these indices bounced off the 200. The NASDAQ didn't quite make it up that high, but you see I use these volatility stops which take into account the average true range, like the volatility up and down of the price. And you can see when it becomes a red dot, that's either a pullback like this or a deeper one. And so you can sell at the first sign of this break or below the EMA, which is the black line, and the switch to the red volatility stop. Sometimes you get a pullback and it goes to a different moving average, or the 50-day moving average, or this exponential 21. But you can see here we dropped 4.5%. That's a huge drop. And these are inflection points. They're important points where things could change quite a bit to the downside in this case. I just want to quickly go, if we look back at 2020, right at the low here was March 23rd, technically speaking. So when I click on this, TC2000 shows me this little box pops up with the highs and the lows and all that. And down at the bottom you see March 20, but actually on a daily basis, that was the day when the Fed came in and said they were going to support the markets and printing money and all that stuff, lowering rates and stuff like that. So that created this huge V recovery ever since then. And then if we look at the weekly, we also can see sometimes better the reversal. So you see this is like a evening star pattern. You have this shooting star with a high upper wick. So it goes from a white candle with a high wick, so that means it got pushed down by the end of the week, and then the next candle went down, and that was a signal of a reversal situation. You can see up here, we had a big white candle, then we had this sort of a shooting star, and then down candle. That's an evening star as well with this reversal. So on a weekly basis, this is like a harami, where this white candle is bigger than the black candles inside the white candle, with a bit of a wick on the upper end here, and then now we're shooting down. So that is not a good sign. But if we go to the daily chart, right now it's sitting at the 50. But so with the charts, you could have got out, like you draw a line, even as if I put on the lines, there's a bit too many lines right now, but you can see this line right here got broken. That's your uptrend line. So right there is a perfect spot to have gotten out. A crossover of the momentum, red volatility stop, break of this uptrend. And so that's a huge drop as well, 4.5%. Russell 2000 is basically the same thing, but it got to just above the 200. And now we have this big drop. And S&P, I'm just going to turn off the post market for a second. S&P, Dow Jones, all around at the 2, and a huge down candle. So yeah, if you had this uptrend line, you could have gotten out right when it broke, or even if the red volatility stop or the crossover. These are all points where you could have gotten out. Now the VIX, the reason I show that was with this is that there was a bit of a break of this downtrend, and now you can get in there, but what you want to see is the second higher low. So then you could draw a line, and you don't know if it'll exactly support this, but right when you support it at that spot with this big up candle. So some point during Friday, when you started to see this upward candle, you could get in early there and use that recent low right there as a stop. And that would be an amazing, relatively low risk entry point. But some of these little spikes are short-lived here, and they're quite volatile. But this just kind of shows you that, this is a potential big reversal, because the Fed, like Jerome Powell, was quite negative about, inflation and what he was going to keep going and persisting with doing things to get inflation back down to 2%, which he wasn't really that hawkish, before. So it's a pretty big turning point, potentially. So I think if we look back at the NASDAQ, we had this. I'm going to turn off the lines for a second. I've been talking about this for many months. This downtrend bounced negatively off the 200 here. But then in July, we started seeing the last couple of months this rally, which people were saying could be a bear market rally. Now we have a high here at the 200, and now this high. So these are lower highs, and that could establish another big downtrend. Also, I noticed that if you're looking at the momentum, which is MACD or price percent oscillator, when you get up like fairly high above zero, you're basically due for a pullback, and then you get down below zero and you go back up, and then you get above zero. And you can see that we were up pretty high up here, and now we're heading down. So it could go down, quite back down to the low spots again. We'll see if it can support at the 50. And that goes for all these indices. So I have another tab of watch lists, which is called US Sector ETFs. So I'm just going to show you, if you click on watch lists, you can use all the built-in ones: Canadian ETFs, US stocks, US indices, ETFs. But if you go to personal, which is where my stuff is, and let's say you popped up any chart, let's say currencies, and then there's this move window. You click on it and you say move, and then it asks you where you want to put it. So you can put it as a tab on the graph or over here. So I usually use tabs, and that way you can have a lot of data. These are all different tabs here. I have a tab I've recently added called previous trades. So every time I have a trade and then I sell it, I put it into this. So because sometimes I'm still curious after the fact on what they're doing, after I've sold them. And I try to learn from, like, should I have held on to it and stuff like that. So it just prevents me from having to type it in all the time, because usually I like to see what's going on with the ones that I've traded before. I have a thing called Uptrend, which is really a condition, and it's built into TC2000, where the close is greater than the close 5 days ago, and the close 5 is greater than the close 10 days ago, and then 10, 15. And that gives you, if I click on balance, let's use a cotton, this gives you charts that are, have a relatively short uptrend. You can change the parameters to make it only 10 days or whatever you want. But so if we look at, you can see right away I'm seeing an uptrend in XOP, FCG, that's natural gas and oil production, and then XLE. So there's only 4 of them right now, but in the US sector, in my own US sector watch list, it only finds 4. But that's quite nice. So if I go to US sectors, you can sort by different things. The percent changed on Friday, because that was an important day. You can see what did really well. But I've also got 30-day, 5-day performance. So it's not just the last day. But you can see from the looks of this chart that wheat, corn, because they're talking about inflation being, persistent when Jerome Powell was talking about it. So this is a good entry point. Because you had this flat period and now you're breaking out above it. So you've got cane, which is the sugar. It's right at the 50. It's not a great, you've got this downtrend to get through, but soybeans, that's a decent uptrend there. RJA is a more commodity-based one. It covers a lot of different things. You can see it's in an uptrend, but it's right now just stuck behind the 200. So yeah, you could look at wheat. That's a bit flat, but it might be, these things, might be doing well. You can look at bonds. Base metals was starting to poke out. So, but if you don't want to get into various ETFs like that, you could look at inverse ETFs. So I have another chart. These are manually created. I added them from Canada and the US, ones that I specifically want, which are mostly one-to-one inverse, but there are a whole bunch of leveraged ones. I'll show you. I have a watch list on the personal tab here. It's called leveraged ETFs. So these are ones that I created. I created these lists myself, and because there's so many. But a lot of these are the direction ETFs. That's the company name. You have the short on the web. These are up huge amounts, and so they're highly risky. But high beta short as well. That's up 13%. Inverse of the semiconductors bear. It's a 3x ETF. But if we're heading down with the NASDAQ, then you can leverage that. There's a financial one as well, a bear. So it's fairly early, but we just shot up here, breaking the downtrend with a new higher low. And there's real estate bear. So if you're bearish on any different sectors, energy, Asian stocks, China stocks, stuff like that. But these one shot up on Friday. So those are potential, if we're starting a new trend, those are ones you could look at if you want to get into leverage ones. But if you don't want to get into leverage, these are some leverage here, but if you want to get into one-to-one, you got short of the NASDAQ, PSQ, RWM, short of the Russell, SH is short of the S&P, DOG is short of the Dow Jones. And then if you want to get into Bitcoin, I actually, I have this one. But when Bitcoin breaks, say, below 19,000, that's probably a more strong sign. This is just an early entry where you broke a downtrend and you just broke a recent pullback. I already drew that line. Let me just take that off. So you broke a downtrend. You have a new higher low, and you have this little pullback. But you're right at the 50. That can get hung up there sometimes. But we're getting close to crossing the zero line of the momentum. If you really want to get into, you could short the ARK K ETF, but like we have this little channel here, and it's might be a little bit early. You can also wait for a weekly green candle on the, a weekly green volatility stop. So it's a little early. There's just a little early reverse, but hasn't crossed on the weekly yet. So that's an early trend, but you can jump in on that. There's a cannabis inverse in Canada. It's not looking great, just that chart, the way it looks. And the volume is incredibly low. It's only 200, so that's terrible. One other thing I just wanted to talk about. When you look at the charts and you're trying to decide what to do, I like to look at the momentum crossover, but so you see how it crossed up and now it's up this whole time and then it crossed. So if you got in, I'm just saying as a potential entry here to there, that's that whole run. However, if I'm really close to the 50, I might not want to get in because it's going to see how it stopped here, here, and here. And then once you break through and you pull back and then you go. So that's like a confirming entry point right here. Or some people get the first breakout, but then a lot of times you get that pullback. But if you buy, a lot of times when you buy, you look at this recent low pivot point down here as your potential sell stop. So it's a bit of a ways away, but it's a strong pivot point in terms of the actual price, not like what you think and what your percentage you can bear to lose is. It's just an actual structural support point. But what I wanted to point out was this histogram. These bars here sometimes can show you things that you can't see. So when this is flattening out, you can sort of see it, but it's done it a bunch of times. You can draw a line like I'll do. Oops, I already did that. Like this. If you see a candle that you want to get into, but but the momentum is declining. It might not be a good time to get in. So that could save you getting in, just because the candle is up, and it, you know, you have to consider if it's the volume as well. Look at this line. So there's a 50-day moving average of the volume, and you can see that, you know, we are below that quite a bit until this big down candle. So like, I'll look at a few other things. If we go to sectors and we look at cotton, like we have this break, a little pullback, and we have an up candle, which is good. But this, you can see the momentum. It's starting to curl back up again. Sometimes if I want to, you see how it's now uptrending again. So that's going to turn upward. But if you saw it like coming down and then you got that candle, like if you see pullbacks here, but you still have this nice upward trending momentum above this moving average, you know, you might keep you in the trade a bit longer because you're seeing that you're still doing well. But if you're over here and you see this right here, you know, you had this pullback and hey, there's a green volatility stop and now it's up here. If you go down here, you're starting to slope up, but you haven't quite crossed yet. You're not above the zero line. But you can see that, you know, you have to decide, like, if you want to get in below the zero line when you've dropped a lot, or if you want to wait and just buy things that are above this zero momentum, which is usually the 50-day moving average. So you have to decide. And I think that, you know, it's a bit tricky when you're close to the 50, but if you're, like with this line that I drew across the tops, you know, I would want to see, like, usually what I look for is higher lows like this. So that prevents me from getting in like right away when there's the initial maybe up candle after a downtrend. I like to see that we've come up and then pulled back and then starting to go up again so that we have that continuing uptrend. And here you can see how the volume spiked a few times when it starts to go up. So that kind of confirms the trade. So that's all I want to say today. So, you know, it looks bad from what Powell said and the big, huge drop in the markets on Friday in terms of reversal. We had a recent, you know, pivot point earlier, so you would have got out sooner than that. And so, like, I totally avoided this situation because I wasn't in the market, because I saw this after this bear market rally. I saw this pullback, and I've talked about it in that video a week ago. So hopefully this helps you guys. Don't forget, you can get TC2000 with the link in the description below for the software, for this trading software. I'll catch you guys later.